Welcome back, traders and investors. We are here for our final interview of the morning. This is Garrett Cook sitting in for Joel Elcon, and I have with me on the line Sean Emory. He is a portfolio manager over at GFG Capital. He's also the author of The Market Meter. Sean, welcome to the show this morning. How are you doing on this fine Wednesday?
I'm doing great. How are you and the team?
We're always doing fantastic. Trying to cover equities for the listeners, trying to get an idea of what the heck's going on the macro scale without actually traveling anywhere and getting a real feel for it. So it's a little confusion today, and especially with earnings coming up, I kind of want to get your view on a few key earnings talks that we've had here. What do you think about earnings season so far? You think these companies in the U.S. are going to be standing up pretty well with all this FX, with all these FX issues that are happening for some of these multinationals?
Yeah, so that's definitely been the story, right? If you just separate the companies that are multinational versus the ones that are pretty much 100% domestic, break out those earnings, and it's a pretty telling story. I think the numbers for the multinational revenue is pretty flat to negative. Earnings is pretty flat to negative. The 100% domestic is pretty the opposite of that, and you're getting roughly 6% sales growth, and pretty much in line on the earnings side. I guess one stock that I know that is being affected and has been affected that we've been picking up because of the FX headwinds, or at least the noise around it, has been Priceline. Everybody knows Priceline. It's one of the biggest hotel travel agencies online. They also have flights. They have car rentals now. But it's one of the bigger names that has been down about 30% over the last 6 months, 6 to 8 months. And we think that we're getting a decent entry point here. And some of the macro headwinds in Europe, 80% of their revenues are derived in Europe through bookings.com. But also the company itself is very large. So if you look at its network, it has about 500 hotels on its platform, on its network. If you compare that to Expedia and Orbitz, which are the number 2 and 3 hotel operators or hotel online booking sites, it trumps those by about double. Orbitz has about 150, Expedia is roughly 300. So that just speaks to the magnitude and the network effect that Priceline has versus its competitors. And at this price, we think we're getting a pretty good entry point. They virtually have no debt. They have a ton of cash flow coming in. So the FX headwinds here in the near term, we think are some short-term noise, but we weren't in the stock 6 months ago, but we just started to pick it up today. So
that seems to be the nice thing with some of these companies. If you normalize for the FX and you just kind of take a look at company operations on a normalized basis, everybody seems to be doing pretty strong overall. Now, Priceline, just kind of going off the cuff, they create that community of, attaching some of these other businesses with consumers that are looking to save money. We were talking yesterday about a company called coupons.com, and I was trying to kind of understand more about this desire of individuals to try to save $1, the need for people to seek a discount compared, on a relative basis to what they think,
right.
something's being sold at. And Priceline seems to be doing a pretty fantastic job of that. Do you expect the company to start introducing any sort of new software? I remember when they came out with the name your own price feature, that was pretty excellent. And then they refined it more by, monitoring how you're searching for stuff and making sure that, they can target you more. But I know Orbitz was under heat a little bit there. I think it was maybe about 2 years ago. There was a report that Orbitz was actually charging more for customers that were booking flights on Apple software because they assumed that they had a higher net income level. Do you see some of you? It seems like everybody's kind of forgotten about that, but do these companies benefit from things like that you're aware of, where they monitor what type of platform you're signing in from or where you're signing in from, and they'll try to skew price to that angle? Do you think it's going to be damaging in the long run if people end up starting to hide IPs and not letting these companies kind of be able to milk these extra little margins from individuals? I mean, Orbitz.
No, of course. I mean, that's actually trickling in not only Priceline's industry, but also the payment industry for Visa and MasterCard. But you're seeing a lot of regulation come down on kind of those squeezing of the incremental dollar that Priceline or some of these solutions are trying to account for. I'd say Priceline, I mean, yesterday there was a lawsuit that came out from IBM over patents.
Mm-hmm.
So that kind of what you were referring to is now seen throughout the industry. And I think companies such as Priceline, Orbitz, Expedia are beginning to focus less on kind of the non-transparent route, and going back to, I guess, what their traditional online payment solution was, call it 10 years ago when they first started. They've gotten a lot of scrutiny over these new type of payments, and is it worth their time, and are they making incremental revenue today? I think they've gotten to the point where they're large enough where they can stop focusing on how can we squeeze an extra buck, but how can we provide a quality service both through online and mobile, and get the users and the hotels in a quick and easy fashion. And you're seeing that with Priceline, their new mobile app. They're also, when they bought, they bought bookings in 05, and then the car rental site that they bought to add to their platform. They bought kayaks. They then bought OpenTable. So you see all these different unique synergies for the space of accommodation. I think that's how they're really looking to grow and change their companies, is through going outside of what their traditional box was, and keeping their traditional hotel operations kind of how it was when they first started, while adding around that and making a whole experience for the consumer when they go visit another city, or whether they're in their own city and they need to either rent a car, go to grab some food, or how it is. It's something that I want to be part of, and I think as the consumer from a macro perspective, continues to delever, these Pricelines, Expedias, and these coupons.com are the ones that are benefiting from a saver rather than someone that's just willing to spend the excess dollar.
So it looks like then, just to wrap it up, that PCLN is perhaps going to be starting to move away from, if you look at a BCG growth share matrix, it's probably, most likely moving away from a star, which has high relative market share and high growth rates, and they're kind of moving into a question mark, which I think has a high growth rate and a low market share, and they're just looking to expand and diversify a bit. So PCLN seems like it has a chance. But now, since we've talked about stars and we're talking about FX, and we did mention Apple when we were discussing those, what do you think of Apple and what's going on here? Because it seems like they're going to be keeping a lot of this capital overseas. It doesn't look like FX headwinds really hurt them bad when they're earning, 74 billion in a quarter. But what do you think about Apple going forward and their potential? Because it seems like all they're really doing is resizing Surface, the surfaces on their tablets, on their phones. I haven't really been impressed with Apple, but either way, these iPhones are selling like hotcakes. These margins are absolutely crushing PC margins, and their growth overseas is just amazing. And the fact that they have their own hedge fund and they can avoid having to repatriate some of this cash, it really seems like Apple's kind of turning itself even beyond just being a corporate conglomerate nationally. It's almost turning into its own sovereign nation, if you will.
It is. It really is. And you can hear some stats out there on comparing their cash balance versus countries, and it's pretty intriguing to hear. But if you look at Apple, we're very bullish Apple. We've continued to be, I guess, our cost-adjusted basis after the split would be roughly in the 60-65 area. When everyone started to hate it, we started to see a company that, similar to how we're trying to view Priceline here today, we start to get involved when everyone begins to hate the stock, and it's easier said than done. But we look at the balance sheet. Again, you're talking about the cash, and they've decided instead of, repatriating the cash back to the U.S., let's just issue debt. They issued some more debt 2 days ago, and that's going to be a lower cost way for them to get excess capital to their core business. It's another cool stat. If you just looked at last quarter, they made $18 billion in profit. You could combine both, or Microsoft, IBM, Intel, Facebook, Yahoo, eBay, Netflix. You could take all those companies' earnings for the December quarter, and that's exactly what Apple made for the quarter alone. So that says a lot, speaks a lot about not only their product, but the business that they're running today. We focus a lot on the brand, and that's very evident how valuable their brand is, just in their gross margin, but secondarily just if you're looking at the cost per unit sold, $698 per unit versus like a Samsung in the mid 200s, that $400, $500 difference is very much made of their iOS system, their brand, and then the loyalty from their consumers. We think that they're moving into various avenues, whether it's the payment systems, whether now you're talking about renewable energy sources when they're going out and potentially buying up land and property to put up either solar panels or other panels to be kind of looks like a Tesla almost. Like they're heading that route, and they're getting really creative with their operation. They know how much money they have. They know how much money they can get at a cheap price. So we're bullish here. We like it a lot. We have a target of 166, and dividend growth is going to be the story, whether it's they're providing that dividend growth through debt or through bringing back some cash. But either way, they have significant amount of cash. They're trading cheaper than the market, which doesn't make sense in our view. And yeah, you could say they're their own asset class, but it's a story that we think is going to last a long time, and it isn't the next Samsung, which is a proponent of their product only, or the phone itself, the tangible phone, as opposed to the software. So we like the software, we like the management team, we like all the cash. I would say that's the most important part, and then we like the valuation.
And going further, when you were talking about kind of how they're their own unique little company here, it seems like they're kind of, like I was saying earlier, turning into their own little sovereign nation. I mean, they issued bonds over in Switzerland. People are getting better yields on Apple bonds than they're getting on Swiss bonds. And it seems like Apple's really poised to take advantage of the fact that, hey, if you're looking for a dividend, if you're looking for protection, we have all this cash, and we can offer you a better yield because we're a corporation, and some of these sovereign countries can print their own cash. So come to us. And it seems like they're kind of positioning themselves globally right now for if there is some sort of rebalance, for big money like sovereign wealth funds, perhaps big money investors like Carl Icahn, Warren Buffett, other individuals. They're starting to expose themselves to a more safe product. And at first, I could see how some people are like, oh, why are they raising bonds? But it makes plenty of sense right now that they're able to be a U.S.-based company but still manage and provide services for investors outside of just returns on phones and things like that. They're also able to offer now some sort of fixed income instrument with the safety of a dividend. And we've seen, I've said this many times all week, that we've seen guys starting to seek high-yield dividends more often now. Is this something that you're seeing? I want to get into another stock, but I just wanted to touch on the dividends with you. Are you still seeing individuals, and are you yourself still seeking asset appreciation on individual shares? Or are you beginning to now start to see, hey, there's not really much growth potential left in these asset share values, but, the business models are strong. Why don't we get into some sort of dividend payment where we can get a consistent payment every quarter? Are you still seeking asset appreciation?
The dividend payment is so last time I came on here back in December, one of our stories was the continuation of dividend growth within these companies. I put out a chart not that long ago, and I put it out numerous times, but it basically shows the cash as a percent of total assets. We're actually at the highest level. Some of that is from the low debt that has accumulated cash on balance sheets, but it's also just the fact that corporations have been a little less optimistic about the economy over the last 4 or 5 years, building up this cash level. Now, this cash has to be deployed in one of, I guess, various ways, but we're hoping, and what we are seeing is M&A. We're seeing share buybacks and share repurchases. So those three together, we think, are very accretive for different types of stocks. And a lot of times when we look at a stock, we'll back out cash to see what's the true value of the core business, as opposed to what is the true value or what the value is with the cash. And that gives us a sense of how much opportunity we have for that cash to be put to work in our favor. So Apple's definitely is the leader in this. If you had to choose one company, one stock. But yeah, we're definitely looking for dividend growers. We're not seeking dividend yield per se. We just have not gone that route. We actually rather go to the high yield market. So we picked up Peabody Energy, the 2016 here in the recent sell-off. And that's how we're seeking income, as opposed to flat out yield in the dividend equity markets.
Okay, excellent then. Well, we have a few minutes left. I want to go. I mean, we were talking about cloud. We were talking about some of these internet-based businesses. There was one that came out this morning with earnings, Wix.com. And Wix looks like they missed. They reported a 45-cent loss, if I'm right, against a 30-cent loss expectations. Do you have any view on Wix? Have you taken a look at some of these cloud-based companies?
Yeah, Wix is one of our favorites.
No
To be
way.
honest with you, Wix is one of our favorites. I mean, it reported this morning. We were excited with the report. We look more so at the absolute than the relative to consensus.
Okay.
But if you just look at the theme behind it, right? So the biggest theme with them is first the split of their revenues is 50-50 U.S., 50 international. They compete against some of the likes of Weebly's and Squarespace, and some other kind of do-it-yourself website building in an easy manner. It's almost like a PowerPoint, the way the product is used. And to the point where the theme behind it is, if you look globally, you look at South Asia, if you look at Eastern Europe, if you look at some parts of Africa and look at the amount of internet usage in those areas, the percent of internet usage as a percent of the population, it's roughly in the 20s to maybe high 50s at most in those areas. So we see a lot of appreciation in internet usage, which then is going to hopefully move into small businesses, and that's really their avenue as we go forward in kind of the next 5, 10, 15 years. And having a product such as Wix or even its competitors, I think they all can benefit. But Wix is in the space today where they have a lot of exposure internationally. They're the first ones there. They have about 12 different languages for the software, for the cloud-based program. And if those different areas of the world can get to where, not necessarily where the U.S. is, where 90+% is using the internet, there's a lot of room for that company to grow. In addition, they have 54 million users, unpaid users. They use the freemium model, and they have 1.1 million premium users today. So you see that huge gap between the amount of subscribers using the free subscription versus the premium. But if you look at the rate of growth, the actual subscription or the premium subscriptions are growing at a lot faster rate than the free subscription. So it's a company we're bullish on and continue to like it. I don't know what it's going to do today when the market opens. I'm not in front of my desk. But either way, we continue to like it over the long term, and we think it's a fascinating story.
All right, excellent. Well, thank you. I just want to correct myself on what I was saying for Wix Q4. They lost less than expected. The company reported a quarter loss versus 30-cent loss, and revenues came in stronger than expected at 41.6 million versus 39.9 million. So we're looking at an earnings beat here, but it's an earnings beat on the loss side of things. So, Sean, is there anything else you want to touch on? What's your outlook for the S&Ps? What do you think about the broad market this week? Or this year even? I mean, do you think the Fed's going to end up raising rates, or are we going to continue to kind of choke sideways here on the S&Ps?
Yeah, well, I mean, we're definitely choking sideways. We've been doing that for the last 3-4 months. Yeah. I guess yesterday was a pretty good synopsis of the market, right? The 7 a.m. Greek news breaks out. Market opens in the U.S. about 1% higher. We kind of lag up until about 12 o'clock here Eastern time. Market starts to teeter-totter, trying to figure out what it's going to do next. We make a series of higher or lower highs before Ukraine ceasefire comes in. So you're seeing a lot of intramarket or intraday volatility based off the headline news. And that's really what we've seen over the last, 3-4 months, really where headline news is driving the markets. We like the U.S. markets. Again, we're being selective in those different names kind of that I was referring to before. We really like Asia. Last time I came on here, I was talking Asia. And if you just look at the markets, India's up 6.5% in dollar terms. China's up 1 and change in dollar terms. Hong Kong's up 6.5%. So that's really where, as the U.S. market trades in the sideways range, we're seeing some opportunities and have been over the last year in Asia, and playing that space where you get valuation plus some potential growth in the area and some stability potentially in China. And while the market here in the U.S. stays between 1980, 2090, we're playing other markets and being selective in the U.S. So I think that's the way to go, and digging into other markets, whether it's the high yield market and getting some distressed energy names or getting some energy names here in the U.S. like Halliburton, which is another one that we talked about in December, that was potentially bottoming out. And so again, being selective in the U.S., looking outside in Asia, and that's kind of how we're playing it today.
All right, excellent. Well, ladies and gentlemen, we will be wrapping up the show there. We were speaking with Sean Emory, portfolio manager at GFG Capital and author of themarketmeter.com. Sean, thanks for your comments. I appreciate you coming on. Thank you, and I hope you have a great week, and we'll be catching you next time you come on the show.
All right, perfect. Good talking to you guys.